Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to kind of talk about Croptoberfest. Right now is harvest season, and so how does that impact the industry? We're going to take a look at Acreage Holdings having a $70 million leaseback option, as well as what's happening in the markets. It looks like it's now right for value investors. We're going to talk about the stock market, how prices are low, and what's going to happen. On the line with us is Dan Kimmis with Good CBD Products.
You know, October in the field has been a dang ball, Chronic. I got to say, I love October.
It has been cold, that is for sure. Oktoberfest, or Croptober, let's call it, is a time when people are running around and harvesting. And so we're seeing a lot of people from last year that have gone into hemp. So they've switched from cannabis to hemp. There's a massive amount online. In fact, I'm expecting 600,000 pounds of hemp to be harvested in California alone. And I don't think Southern Oregon is aware of that. There's already 200,000 pounds that have been harvested as of last week. A friend of mine got 6,000 pounds of that. Very, very small amount. But nonetheless, I think Oregon is going to see huge price declines as they're impacted by the California harvest season.
You know, the big farms, right? And how, like, if you're in legal weed, you think in terms of tens of pounds, hundreds of pounds, on occasion, thousands of pounds. Mm-hmm. When you're in hemp, you don't even really start counting until you're at thousands of pounds. And, oh my gosh, you know, it's something to see. 40 tons of hemp, you know, and we've seen it.
I got to do the math sometimes because 124,000 hectares is something that just doesn't compute in my brain. To get 300 and something thousand acres is crazy. And that's just one company in Brazil with 124,000 hectares. So yeah, just wait for this to kind of impact the market, which in my opinion already has. Acreage Holdings, GreenAcreage announced a sale-leaseback deal worth $70 million. So I haven't seen this happen in the cannabis space yet. To make a comparison, Greece, the country of Greece, they were able to get into the European Union, the EU, because Goldman Sachs did a leaseback option. They bought all of their debt. So when Greece went to apply for the EU, they were approved because their balance sheet looked good. And then Goldman Sachs sold them back their debt, and then Greece plummeted. We saw that, 10 years ago. So I'm not a fan of leaseback options. It is a normal way to conduct business, but it's a way to circumnavigate equity. So you can get loans on property, plant, and equipment. It's kind of like an existing loan on assets without having to give equity up. But at the same time, it's off the book entries, which I think is somewhat shady to not have everything on the books. If it's not transparent, it's shady in my opinion. And off book balance entries like leaseback options are normal, but not necessarily a great idea.
Yeah, I'm not a big fan of things that are off the book.
Yeah, hopefully they won't turn into Greece and just crumble. But, those types of situations do create opportunities. And so looking at, the valuations of stocks right now, they have kind of all gone into somewhat of a correction. There's an overall retracement. There's a Fibonacci retracement of 61.8% since March's high. And so with this AI-based algorithm that we have that's technical analysis and has predictive analytics up to a week in advance, is showing a support level for our index. And it's our price point is $4.75 for this index that we have. And it could drop down to $3.90 before the bottom is met. Having said that, there are lots of green lights flashing as potential buys. What that means is as these prices are coming down, buy options are starting to flash. So that all means that there's a value opportunity. So according to this article, it says 2019 has been extremely disappointing for investors in cannabis stocks, with the overall market as measured by the new Cannabis Ventures Global Stock Index is down 20% after a 55% decline in 2018. The market, which has declined over 71% since early 2018, has moved to 3-year lows. Current environment is challenging as funding is dried up. Many companies won't make it or will have to raise capital on extremely unfavorable terms that will substantially dilute shareholders if they aren't adequately capitalized. Investors are quickly figuring this out, and the broad selling has certainly hurt the companies with high cash burns and weak balance sheets the most. So with that said, the aggressive selling over the past several months has impacted companies that appear to be adequately capitalized as well. Cannabis industry has attracted many growth investors over the past few years, but the steep decline across the board has left some companies that should appeal to those value investors. So in Canada, there's 51 companies that grow or process cannabis that own just some of the 245 licenses issued to date by Health Canada. Value investors should relish on the overabundance of names, as it makes thorough diligence of the sector quite challenging. In other words, with so many companies, it's quite possible investors could make mistakes, creating opportunities for other investors who are able to find the proverbial baby in the bathwater. Basically, boiling that down, there's a lot of people that are pulling their money out as this kind of capitulation is starting to form in the markets. People are just giving up. They don't know where to go. But like I mentioned before, there is kind of a flattening out point where there is an opportunity to get in at the quote bottom and kind of see some nice returns, I guess. So we've said in the past that most investors and research analysts in the space have been focused on metrics, so traditional lenses of finance, looking at value investors. What we saw before was speculation, huge parabolic upshifts, just like in Bitcoin, with large crashes. So a lot of these companies don't have the fundamentals to survive. You look at MedMen, it's just a matter of time when they went out and purchased their commercial real estate at high valuations. As soon as the market kind of corrects and some of those commercial prices drop, MedMen's done. They're going to have to liquidate property, plant, and equipment, and probably get broken up somehow. So my near term in the next 18 months is going to be a lot of adjustment, shifting. A lot of companies probably going out of business that can't survive the vape gate, certain tax, roadblocks, lack of SKUs, lack of scaling, lack of banking. Interesting times nonetheless.
I got one for you. You ready?
I am.
Due diligence. Yes, indeed. It's so funny. Nobody, if you ask a company, hey, how are you doing? You're not going to have somebody say to you, oh, we suck, homie, right? You're not, okay? So figuring out who's stable and who's not, that's why you listen to the Talking Hedge.
We've talked about valuations that were crazy. Weed Maps had a $419 million valuation, close enough to 420, right? And then now they laid off half of their workforce. So, or maybe it was 25% of their workforce. Regardless, it was a substantial amount and they had to lay them off. So yeah, you go around and you run around and you get improper valuations and you're probably not operating adequately, efficiently. You blame the slow rollouts in California. I mean, that's crazy. So it's just, for me, it's more of seeing all of these companies having to lay off massive amounts of people and the decline in their valuations. It's all a matter of this next wave, which will be consolidation. I think the speculation is over. The people who expected that to come into the US, they've missed out. The first mover advantage is almost over at this point. There will be a new wave, but they're going to have to wait a long time. And I don't know what's going to happen with the dollar at that point. You think a dollar is a dollar 10 years from now? It's not. So your purchasing power goes down as they keep printing money. I think we're in like quantitative easing 8 or something. They're printing like $40 billion a day. You think prices in housing are going up. What you don't realize is that your value of your dollar is going down. So marinate on that for a second. The dollar is collapsing. I don't think many people realize that. But cannabis is a safe haven. There is an inverse relationship. As the economy goes down, sin stocks will go up. So take a look at that. So going into this article, capital markets aren't entirely closed cannabis companies. The ability to raise equity at reasonable prices has greatly diminished. So investors have responded by sending prices to multi-year lows. The broad sell-off has hit all stocks, but some companies have a better balance sheet and operating models than others. So using a value investor metric, price to tangible book value can help identify potential opportunities, but caution readers to relying solely on the metric. Instead, investors should favor the companies with low valuations for strength of balance sheet and avoid companies with high operating losses. They'll be swimming upstream as the tangible book value erodes. We've kind of been talking about having a war chest, making sure that if you're in the industry, you know how to pivot, you know how to stay relevant, you know how to operate indefinitely. And it's not, some of these agricultural companies who think that cannabis is just a weed that they can grow.
It's normalizing. So the opportunities, the early mover opportunities were Washington and Oregon and some things there. Not a lot of people actually realize today when a state goes legal, they have the history of Oregon, Washington, Nevada, Colorado to look at, okay? That state goes legal, and a lot of the very same issues that came up here over 2 or 3 years happened there over 12 months, right? And so if that trend continues, by the time you get to the 19th or 33rd legal state, it's going to go legal, and all of the issues that happened in Washington or Oregon are going to happen in like 15 days, right? The trajectory on this is nutty, and this is where getting out ahead of it and literally doing exercises where you say to yourself, it's like leading a target, right? Where you're like, okay, if I shoot for where it is, I'm going to miss it. How far ahead do I have to lead to hit the target? And I think it is. It's like you got to be like a 2-year futurist in this one. I think you do.
To think 5 years ahead in advance and have an understanding of how the marketplace works. You and I saw that Oregon had some issues with solvent products in 2015. They pulled all of the products off the market, and now with the VapeGate, we're kind of seeing that same issue. So if you didn't learn from the past and have solventless products in your SKUs, you didn't learn. And so same thing when regulations hit, you need to be able to adjust, whether that's banking regulations, manufacturing, advertising, or otherwise. You need to stay nimble. Staying with the Talking Hedge is going to give you that insight, whether it's the predictive analytics or just our experience, boots on the ground, looking at what's already happened, using that insight to kind of look at a crystal ball prediction, which, by the way, is our December panel. We're going to have crystal ball predictions, what's going to happen in 2020. So stay tuned with that. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't.